Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Welcome back, and obviously wishing everyone a very happy new year. Certainly 2020 looks like it could be pretty interesting on the investment side. Obviously, just a bit of a recap. If you look at it, sort of 2019 was sort of really highlighted by potential sort of hurdles and a sort of wall of worry that people were really concerned about in terms of impacting the investment markets. But if you just look at the potential hurdles that were put in place, first you had the US-China sort of trade war. We've now had a sort of partial sort of agreement on that with phase one. You obviously had the election in the UK as well, with a resounding victory for the Conservative Party. That sort of smooths the path for Brexit. So if you now look at the sort of fundamentals, you've still got record low interest rates around the world. You've got near record low unemployment in most countries. You've got pretty reasonable growth, although it's not sort of gangbuster. It's still pushing on and just slightly above trend. And against that backdrop as well, you've still got really benign inflation globally. Even the potential sort of flare up with tensions in the Middle East, with the US sort of drone strike on the Iranian general, and the subsequent missile launch from Iran really couldn't derail the markets. And if anything, if you look at it, sort of Iran seems to have shot itself in the foot a little bit, obviously with the downing of the plane. That has really put the Iranian government in really a pretty tricky situation, because they seem to be losing support at home as well now. So looking forward, it's going to be very interesting to see how the US earnings season sort of pans out. Early indications, certainly from JP Morgan, look pretty good. Their earnings really crushed the street's sort of expectations, and that has sort of helped push the Dow above 29,000. Now that's really quite interesting, because when President Trump won the election back in November 2016, the Dow Jones was sort of 16,000 odd. Fast forward now 3 years, and it's now just over 29,000. So if you look at that going forward, obviously in the election year now in the US, I think as long as the US economy still seems in pretty good state, and is still sort of progressing and moving forward, all likelihood is that President Trump will be re-elected for another 4 years. Because certainly at the moment, the Democratic sort of candidate looks like it's going to be Joe Biden. Really doesn't seem to be gaining much sort of traction out there. Now, I sort of mentioned briefly, oil had a major sort of spike on the Iranian-US sort of conflict, but that sort of waned really pretty quickly. Oil came back and is now just below that sort of $60 again on WTI. And in the UK, obviously with the Conservative Party winning a pretty landslide election result, that sort of cleared the path for Brexit. That looks like now will take place pretty easily by the end of January. And then going forward, the really key dates appears to be sort of the EU summit in sort of June, when potentially you sort of get the sort of deals and sort of trade deals sort of starting to be put into place as they're sort of moving forward. But interestingly, sort of quite a few economists and analysts now are sort of predicting after that sort of election result for Boris Johnson that it really was pretty resounding success. There's a little bit of upside out there for UK equities and assets. Mainly on the back of the fact that there's now a clear path forward. Now, obviously, the events in Australia with the bushfires, really been pretty horrific, and it's just going to be interesting to see, the impact on the economy. Certainly there's going to be a lot of sort of state and federal aid and government support for those sort of areas. Now, while that can't replace the sort of loss of life that has been suffered during this, these sort of horrific events, especially for businesses and households as they look to get themselves back on their feet. Here in New Zealand, election year as well, and again, the economy looks in reasonable shape. Growth is okay. It's not sort of gangbusters, but with record low interest rates, you've got low mortgage rates. Housing market is certainly picking up. You've got benign inflation, and all sort of pointers point to an economy that's sort of moving along at an okay rate. Now, whether that will be enough to get Labour re-elected in sort of September, October, we'll just have to wait and see. Certainly, early indications appear to point to a pretty tight election, and it really could be quite interesting come sort of September, October time. Now, again, for investors out there still looking for income, it really is pretty tough with, they say, with these sort of record low interest rates. But if you are looking for alternative options out there, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.